Good afternoon, BAFS student. I'm Mr. Tam. Today I would like to talk about the statement of financial position. Okay, before I start this topic, I would like to have some revision for you. At the beginning of our subject, we talk about an accounting cycle. Okay, and we start with books of original entries. Actually, we have learned 6 books, 6 journals. Okay, they are purchases journal, sales journal, return invoice journal, return outvoice journal, cash book, and general journal. This is the books of original entries. And the next step, we have learned about double entry, which includes T accounts. And third, we have trial balance. We have learned use a table to show all debit balance item and all credit balance item to see whether they are balanced. And 4, we have income statement. That we have learned in last topic. And today we are going to learn statement of financial position. It's a kind of financial statement for sole proprietorship. Income statement is the first type, and the second type is statement of financial position. So statement of financial position is prepared to show the financial position of a business at a particular date. Usually it's the end of an accounting year. So the typical example is the 31st of December of each year. And it showed 3 kinds of elements: assets, liabilities, and capital. So it's related to an accounting equation. Assets equals to liabilities plus capital. And assets can be classified into 2 types. First one is non-current assets, and the other one is current assets. So non-current assets refer to assets that have longer useful life and not intended for resale. For current assets, they have shorter useful life, can be converted into cash in short period of time. Here you may ask a question: what is longer useful life and shorter useful life? Okay. And to answer this question, we use 1 year to determine whether it is longer useful life or shorter useful life. If less than 1 year, it's called shorter. If longer than 1 year, we use longer. So less than 1 year is current assets, longer than 1 year, non-current asset. So let's talk about non-current asset. They have three kind of features. The one is more than 1 year, not intended for resale, and for the purpose of operating a business. These are the examples: premises, plant and machinery, fixtures and fittings, office furniture, motor vehicles, office equipment. Yeah, they are not for resale, have a longer useful life, more than 1 year useful life. And then they buy it for office use. For current assets, they must generate future benefits for less than 1 year. Less than 1 year is very important. Converted into cash and intended for resale. So we bought in order to earn more money. So here are 4 examples: inventory, account receivable, bank, cash. Okay, liabilities also divided into non-current liabilities and current liabilities. Non-current liabilities refers to debt we pay after a year, that is longer than 1 year. Current liabilities we pay within a year, that means shorter than 1 year. For non-current liabilities, they are debts after 1 year. An example, a long-term bank loan, mortgage loan. We cannot pay them within 1 year. We have to pay more than 1 year. Okay. Current liabilities are debt that has to within 1 year, shorter than 1 year. And account payable, bank overdraft, short-term bank loans are examples. Okay, for capital, the opening balance of capital will be shown in trial balance. And how can we find the capital balance, closing balance? We can use the opening balance shown in trial balance and net profit and net loss we find in income statement. From income statement, moreover, if some owner they have capital introduced, we should add it. If drawings, that means the owner take away the goods for own use, take away goods from business for own use, we can lower our capital balance, so we have to less it. Okay, so how can we find the closing balance is, sorry. Okay, let's see this table. Sorry. Okay, so sorry. So what is the steps on preparing statement of financial position? First, we have to find all the asset and liability balance from trial balance, and then list out all the assets and liabilities. First, and then adjust the capital balance. Opening capital plus net profit, and then minus drawings. We can have closing capital. So what is the format of statement of financial position? First, list out all the non-current assets. We have premises, office equipment. Second, current asset. Inventory, account receivable, bank, and cash. And then third, we less current liabilities in order to get net current assets. So net current assets is 2 minus 3 equals to 4. And finally, we less non-current liabilities. So the balance of asset minus liabilities will be equals to capital. So how to find the capital is the opening balance add capital introduced or net profit less drawings equals to the closing balance. This is the closing balance. Of capital. So a non-current asset are usually less in descending order of permanency of the asset. That means if we bought the non-current asset first, okay, we list out at the top, and the lower is the non-current assets that we listed by, okay, we buy latest. For current asset, we list at the liquidity. So the order should be inventory, which are the most difficult to convert into cash, and trade receivable, first is cash at bank, and lastly is cash. So current asset net less current liability is equal to net current assets. Another term is called working capital. So finally, we talk about the difference between income statement and statement of financial position. Income statement, we include all revenue and expenses. And for statement of financial position, we include assets, liabilities, and capital. For income statement, we want to find out whether the company has profit or loss. For statement of financial position, we want to show the financial position of the business on the last day of an accounting year. Income statement report the revenues and expenses for an whole accounting year. Statement of financial position only show the statement of assets, liabilities, and capital at the end of the accounting year on 31st of December. And for the income statement, accounting balance will not be carried to the next year. But for statement of financial position, the balance will be carried forward to next accounting year. So I hope you may learn the content of statement of financial position through this PowerPoint. Thank you.